Welcome in to another Coinage Chat. Ladies and gents, thank you for tuning in. This one is an exciting one. I'm the host of Coinage, Zach Usman, coming to you live from our Brooklyn studio with a very exciting spaces set up today. For the first time, we're going to be talking price. This is something we do not do on Coinage. In fact, we promised that we would be a different type of crypto show where we don't just talk numbers on the daily. So it's a very important discussion today, and to join us and to explain it all for this very important discussion, I wanted to bring in a friend of mine and I think one of the smartest analysts in the crypto space. Farrell is the head of digital asset strategy at Fundstrat, and he joins us today to chat through all these things, where prices are going in 2023, how all of crypto kind of fits into the broader market. And Sean, thanks for joining me on Coinage, man.
Hey, Zach. Thanks for having me on. Flattered by your comment regarding one of the smarter crypto analysts, but I'm not sure if that says more about me or just the quality crypto analysts in the space.
It may be, it may be both, but I'm going to lean into the optimistic side of that this time around. And it's true. You and I have chatted a few times back when I was at Yahoo, and really, honestly, the price calls here, I think, as the spaces have evolved, there's more questions around where do prices go. Sure, that's always a question. If you're an investor out there, you're trying to make money in the space, it's important. But I think even more so now, after 2022, a lot of people are confused about what crypto is. What is Bitcoin? What is Ethereum? How should people be looking at it? Where do prices go if you start to see maybe some of those macro elements start to change as well? So I'm excited to have you on. Thank you for taking the time. We've set aside maybe an hour here to walk through, I guess, all of your big outlook on 2023 that you provided at Fundstrat. And I think there's a lot of learnings to take away from this. And so we're going to get through all that. We're going to talk about how it fits in the broader market. We're going to talk about where prices go. Some bold price calls, by the way, ladies and gents. We'll tease these ones ahead. You have potentially Bitcoin hitting 44,000 this year, and ETH, I believe, is 3,400 on the top end. So those are some big numbers to get into. But specifically, I guess, beyond that, we'll talk about altcoins, how they mix into. But let's just start with just what exactly Bitcoin and Ethereum should be seen as this year, because we've heard a lot of talk about a hedge against inflation. Pomp we had on just last week talking about how it's still a hedge against inflation. Some people might not be convinced on that anymore, but why don't we start on how crypto still fits in to the broader market?
Yeah, crypto is, to your point, it's kind of like Rorschach test for investors. There was, as you alluded to, there was that prevailing theme, particularly amongst the Bitcoin fundamentalist community, that perpetuated this idea that it was, this hedge against, it was risk-off hedge against CPI inflation, right? But when you step back and, obviously last year proved that theory to be incorrect, right? A lot of that has to do with the fact that Bitcoin is still, an investment in a future monetary base, right? And in thinking about it like that, I'm going to go back on what I just said and say, and agree with Pomp and others that it still is a hedge against inflation, but it's a hedge against the kind of inflation that I think, economists and analysts as a whole kind of forgot about over the past several decades, and that's asset inflation, right?
Yeah.
When monetary conditions ease and the money supply increases and, there's no cost of capital for the better part of a decade, obviously it's not unreasonable to expect asset prices to, get ahead of their skis. And if you think about it like that way, think about Bitcoin and the wider crypto market as kind of this liquidity sink, it actually does make a lot of sense.
Yeah.
And could be contributing to some of the current rally.
Yeah, I think that's like, I guess that's the important thing to keep considering here when we talk about, yes, Bitcoin supply is capped 21 million. There will never be more printed. And that seems to be a very important thing. No matter which way you want to look at it, people keep going back to that. And I think it's, it's true, as it is a very different system than the current financial monetary system, in the way that banks will continue to kind of, I suppose, central banks around the world continue to print more and more money. So why don't we start there? I mean, so on the YouTube, we'll have all these charts and stuff so people can watch that. But one of the first ones kind of in your presentation that is interesting to me is the correlation between Bitcoin and equities in the dollar. Just to, again, I guess, hit finer points on how this all fits in. Why don't we start there?
Yeah, absolutely. So correlations among most macro asset classes were pretty strong throughout last year. I think when looking at this, it's just correlations among crypto and other macro assets are a reflection of the owners, a reflection of who owns those assets, right? So what we saw in, starting around 2020 is that crypto started to be, what we used to have was, the Venn diagram of people that owned crypto and owned, gold and stock, et cetera. Those were two circles basically. And starting in, late 2019 into 2020, those circles started to mesh. Crypto became a large enough, liquid enough asset class to for institutions to invest in. And so as the liquidity sink it is, as I just mentioned, we started to see, Bitcoin, wax and wane with tech stocks be pretty strongly inversely correlated with the dollar. That's basically what we're seeing in this chart here.
Yeah, it would make me seem, it would make me maybe use this data to point back into more of a tech stock, because that's kind of the thing is everyone kept saying, okay, Bitcoin's trading more like a tech stock, and that's I guess the high correlation to the QQQ there than other tech stocks. But this other one I think is interesting too, because you think about Bitcoin being a hedge against inflation. What you're talking about also is perhaps a hedge against declining earnings per share. So, when you think about the relationship between Bitcoin and the markets, Bitcoin and tech stocks, talk to me about what this slide is all about in terms of your thesis around maybe as we see the market and companies start to see earnings get hit, what that might mean as a catalyst for Bitcoin.
Yeah, absolutely. So I think this slide is best paired with the correlation slide that we just showed, as well as, the preceding couple of slides. But I think a lot of what many investors were concerned about, crypto investors, was the possibility of a recession. It was probably the most crowded trade this year among traditional financial professionals. And, it was a worthy concern, right? Because we have no good precedent outside of a couple of months in 2020 of how Bitcoin and the wider crypto market would perform in the face of a recession. But I think the point of compiling this data, which demonstrates the relationship between Bitcoin over the S&P 500 compared to trailing EPS performance, the point is that just because we might enter an earnings recession, it doesn't necessarily spell doom for Bitcoin or crypto. And that's because Bitcoin and crypto don't really care about EPS. They don't care about earnings. They really just care about liquidity conditions. And for some of the larger cap assets, they do care about some underlying on-chain activity. So we just wanted to set the stage heading into this year that, whether it be in second half of this year, whether it came in Q2 of this year, a recession in earnings does not necessarily necessitate carnage in crypto.
Yeah, there was plenty of carnage. I think that was one of the points that I enjoyed too, is not harping too much or focusing too much on what happened in 2022. I think we've all experienced enough of that now. And as we look ahead, I guess, we can dig into the price predictions now, because maybe that's exactly what people wanted to hear more about is all right, Bitcoin obviously dipped below 20,000. Now it's above 20,000. And now you got the price call of over 40,000 at some point in 2023. So, I mean, what are the main catalysts there on the Bitcoin front that you see as maybe the easiest reasons to point to of that? I don't know if it's really, is it bullish case? I say it's a bullish case if we're talking a double. So what do you see?
Yeah, I mean, look, any direction other than down at this point has me feeling elated. But so I'd say it's a bull case. But look, stepping back from a high level, I think we started out with the perspective that, the bottom was in, right? The liquidity trough, in terms of, from a rate of change perspective, the market has never been slapped in the face as hard as it was in 2022. From a year-over-year perspective, the Fed funds rate, the rate of increase, I hate using this word because it's been abused over the past few years, but it truly was unprecedented. And you can see it in the futures market for the Fed funds rate. As of January 2022, the Fed fund rate, which prices in, the forward rate of the, Fed funds rate, was anticipating a risk-free rate of around, 100, 150 bips in December. And obviously that did not transpire. We ended up around 450. And so, everyone was kind of caught off guard by this. And so understanding that framework, we really just had this wall of worry to climb starting in January from all of the, centralized players and the fallout of, forced selling and whatnot.
Yeah.
As we progress over the year, thus far in Q1, we've had interesting developments in terms of market liquidity, which has gotten us pretty excited and feeling pretty good about the first half of this year. And then in addition to that, there are several catalysts on our radar, including the Bitcoin halving, which is less than 12 months away, or just about 12 months away. We have Shanghai coming up, EIP 4844, and a number of other catalysts that could potentially take shape.
Yeah, you just threw out a lot of things there. So let me maybe just break those pieces down, because you're talking about upgrades to Ethereum. You're talking about the halving, which is
fired up.
Yeah, I mean, there's a lot going on. I mean, the other one too is you talk about the halving, and that one is interesting just because I think here. Let me find this chart on here, because I think it's also important to put in the context of kind of how these things go, and it always seems to be a trigger when you talk about the reward that miners get for mining Bitcoin getting cut in half, and that happens generally. We're talking about it. It's 4 years time. You can talk about how long it takes for it to actually kick in. But the excitement that brews around it generally kicks off these triggers in Bitcoin's runs. And you're talking about that happening again here. And if you extrapolate it relative to past and prior halving cycles, talk to me about maybe how big of a piece that is for your price call for Bitcoin doubling.
Yeah, look, obviously, having the block reward obviously puts a bottleneck around, the rate of supply increase. So that is just a fundamentally bullish catalyst for the asset. I think everybody's pretty familiar with that. But in addition to that, I think there's just generally, we're at the point where I think, a lot of crypto investing, is this combination of, quasi fundamental analysis, understanding catalysts, understanding macro, and understanding, narratives that kind of drive the market. And so, it's not just necessarily the halving that, is destined to bring price to X dollars. I think that the pure supply side models have kind of been debunked at this point. I know a lot of people still like to throw around the silly stock to flow model, which is, oriented around supply, but, that's been pretty debunked at this point. So, I would view the halving as this fundamental catalyst, but also a narrative-based catalyst, right?
Well, I'm putting everything that you're putting down together, and I'm trying to piece this thesis, right? So we talked about the halving as being a potential catalyst to kick into a more bullish outlook, but also the other piece that you kind of look at in your report is also around frothiness in the market, right? When you think about where people buy into Bitcoin, what that's looking like, market value to realized value is another term that maybe we should throw around and define there, is kind of looking at the profitability of coins held from people around the Bitcoin ecosystem, at what point they're getting in, at what point they get out. And that might be another piece of the narrative here, because, if you're not in crypto, if you're not in Bitcoin, you might say, how after 2022 could it be possible that you would see a double in 2023? There's such bad news, so many bad things. But as you point out, frothiness is actually at a historic low when you piece all of that together.
Yeah, no, absolutely. And, for a very long time, I think a lot of crypto investors kind of, I would say on-chain analysis was kind of a joke amongst some of the professionals in the space. It might still be. But I think that has more to do with the fact that these metrics aren't necessarily properly employed. So, the model you just pulled up, this is showing our Bitcoin's market value to realized value. And, Bitcoin, as we kind of alluded to before, is this investment in a future monetary network. In a sense, there are a few ways to value this network, right? One, the first way is kind of, the way I think a lot of people used to value it is as this, fully scaled payments network, which you'd probably take a multiple of GMV or multiple of, just a plain old multiple of fees. But it's limiting and kind of doesn't fully capture the potential of the Bitcoin network, right? And I think we've kind of seen that play out. There's kind of this movement to move transactions actually more to the, Lightning Network and, have Bitcoin serve as this, global settlement layer, and will be seen as a store of value, right? And so how would you value a store of value? You'd value that as a multiple of capital stored on the network, right? And this is cool. This is another way we can separate, gold or another commodity from, Bitcoin. We can actually see how much value is more or less being stored on chain. We can use this realized cap multiple. This realized cap multiple will show you, the overall cost basis of the network, right? And what is the capital stored in the network? It's the overall cost basis, more or less. And so with this model, we can look back. We can look at previous levels of capital inflows coming off of a market bottom, make reasonable estimates, and then apply a reasonable multiple to capitalize that inflow. And that's basically what we're doing here. It's certainly more art than science, but that's kind of the nature of investing, right?
Yeah, no, it is. And I like the mix of both art and science, and I think that it's important because, people throw out price calls all the time, but very rarely is it a combination of both art and science that is backed up by the data that you're kind of reading into here. And we talked a lot about Ethereum and kind of where that goes, Bitcoin and where that goes, but I do wonder about Ethereum because that one, to me, I suppose at a very simple level, you'd be talking about, the upgrade, and you mentioned Shanghai, you mentioned before kind of this shift to be deflationary. Talk to me about what that means for Ethereum as you put out a price call of 3,200, which I think might be eye-catching on why Ethereum could see such a big boost as well.
Yeah, absolutely. So we didn't do too much, excuse me. Now, in terms of how to value ETH, we didn't put together any kind of exotic model, as a multiple of, in the past, I think a lot of people have tried to model ETH out as this, kind of in like a AWS type way, right? You pay, which is fundamentally correct, right? You pay to use block space, right? You pay fees to the network. In the same way that you would pay Amazon, but here you are just paying validators, right, in a decentralized way. But, fundamentally, it's just not, the network has not progressed to the extent that, or it's not matured to the extent that you can apply that framework to understand where price is going over any given year. So really all we did was apply a multiple of Bitcoin because, as we are well aware, crypto is highly cyclical, and oftentimes, Bitcoin as the leader within the space, still comprising about 40%, I think, of the total crypto market cap. That's where liquidity starts and eventually migrates to ETH and other alts. So that's kind of some background on where we got that price estimate. But, in terms of, I would love for you to pull up the chart on slide 20 if you can. You know, in the carnage of last year, you know, this might have been lost on a lot of people. You know, one of the amazing things that transpired, but you know, the Ethereum network has fundamentally changed. You know, for the better in terms of pure supply fundamentals. You know, I would say we still and have had an on-chain bear market since the merge happened, but the network has been net deflationary since that point, not disinflationary, not deflationary, and so that's just a lot of drag that is pulled off of price, and yeah, I mean it's just an amazing look at the chart and you know, getting a feel for how much daily supply pressure was actually pulled off the market following the merge.
Yeah, to elucidate that too, I guess just to double down on the point, you know, a lot of people might be confused, or, you know, I myself have been intimidated by some of these, like, what's going on this time with this upgrade to Ethereum, or what's going on here? And that's a reoccurring theme across all of crypto, I think. But when you think about just the very simple economics, your Econ 101 that you're talking about there, when you talk about disinflationary, deflationary, and how some of this stuff could be supportive of price, it's really just similar to kind of the simplest Bitcoin theme, in that the supply is capped, but more so when Ethereum is being burned in these transactions, that also would be supportive of price. I think, is that the way you would explain it to someone who's like 5 years old?
It's a bit reductive, but it's true, right? It all kind of comes down to supply and demand, and I think that's why we've seen such a big lift off the bottom. Is that the net, like, you know, the market is pretty illiquid right now, and every cycle, kind of shifting back to Bitcoin here, but this kind of applies to ETH as well, and some other alts. You know, every cycle we see the early movers gather their nuts first. Price starts to jump. Momentum guys come in. Leverage gets added. People get washed out. The first buyers sell the top, and you know, the market finds a bottom when, you know, the long-term investors start to form price discovery, right? We don't see, you know, new capital inflows, but there's this inherent on-chain buy wall that forms. And yeah, so I actually don't recall what question precipitated that response.
No, it's just around how easy, you know, once you really like throw out, I guess, the complicating factors here of all the things going on behind the scenes, but just a kind of fundamental belief of, you know, supply and demand, and kind of how burning more of those tokens in transactions would eventually result in a higher price.
Yeah, absolutely.
But you raised the point about which ones lead in the next kind of cycle, and that has been an interesting kind of dynamic between Bitcoin, Ethereum, and then everything beyond it. In season 1 of Coinage, which, by the way, if you're listening out there, you know, buying our NFTs lets you call on the show with us to tell us what to cover and what to highlight. So we covered a few things in season 1, and Sean, you're actually one of our NFT holders too, so thank you. But this was an interesting piece of the slide too, because I feel like we talked with Anatoly, the co-founder of Solana, in season 1 about kind of how much gets thrown at them when it comes to things that go bad. And one of the things was Solana, right? One of the hot tokens of the last bull run, kind of getting a lot of negativity attached to it. And you can, I guess, tease into a few of those reasons, whether it be scams on Solana's network, or whether it be, you know, SBF's collapse and the idea that, you know, he was a big Solana backer. I thought that this was an interesting SAT analogy question. The way that you titled this slide, SBF scam tokens is to Solana as ICO scams were to Ethereum. So talk to me about, I guess, that and what you see for Solana, and maybe, I guess, you know, what people should be thinking about that particular token in 2023.
Yeah, look, that slide, I guess, was a little tongue-in-cheek, but you know, if we were to evaluate some of these networks based on the fundamental character / morality of their early adopters, you know, I don't think there's a Bitcoin maxi out there that could fundamentally support holding Bitcoin either. I mean, you think about some of the, we'll call them unsavory characters that have been Bitcoin proponents over the years. Some of its early adopters kind of, and some of its, frankly, some of Bitcoin's, early use cases were illegal, immoral. You apply your negative connotation, but there's some objectivity to this analysis that you can reasonably say that there were not good actors that were using Bitcoin. But that's because those are always going to be the first people to kind of try and use these technologies that operate outside of the modern financial system, right? So the early adopters of Bitcoin, whether it be Silk Road, hiring people for murder, whether it be I'm sure there are others. There were these unsavory use cases that highlighted, frankly, the biggest the value add of Bitcoin, which isn't. I know you mentioned the supply cap, but it's not necessarily a supply cap. It's a censorship resistance, right? And these use cases highlighted the censorship resistance of Bitcoin. And over time, obviously, those use cases were realized by more well-meaning people applied in more, I guess we'll call morally sound corners of the world. Same thing happened with Ethereum, right? We discovered this huge, globally available liquidity market, right? And this market for smart contracts and block space. And we discovered what we could do with this block space and these smart contracts. Unfortunately, the first people that were in the pool were people who used it for making a quick buck, and that's why we have those ICO scams up there.
Yeah.
Fast forward to Solana, this fast settlement global state network that is obviously offers a different value add than Ethereum. Those attributes were discovered, unfortunately, by SBF and the developers on his team first. And a lot of the TVL that came in was attributed to those scam projects. But fortunately, over time, and look, a lot of this is anecdotal, right? This comes from talking to developers in the Solana ecosystem and using the network and seeing what's being developed. The fundamentally useful aspects of Solana rose to the surface, and it's our anticipation that we're going to look back on 2022 as kind of the fire for the iron of Solana, and it's likely that that network will be better off because of what transpired.
Yeah, I guess if you were to just highlight, everyone always talks about these coins are going to explode in 2023 early. Keep your eyes on these altcoins to watch. And I don't know, I feel like those are catchy things to talk about, catchy headlines there. But if you were, as an actual analyst who has watched this space, if you were to throw out your coins to watch in 2023, save me from having to do it. I don't want to be the one. I'm not the analyst here. But if you were to look at everything and say, okay, I don't know, these are the ones that you have on your radar as honestly the top 3 coins to watch.
Yeah, look, and I feel comfortable and respectful of our playing clients talking about this because a lot of them have, frankly, already done quite well. But, coming into this year, I think we were quite constructive on liquid staking derivative tokens. We've been putting out notes for the better part of a couple of months now, discussing how Shanghai would be a tailwind for both, particularly Lido and Rocket Pool. And they have both done remarkably well. I think they still have some juice left in them, going into Shanghai. There will probably be some kind of retreat sometime after that point. But they've done quite well. Matic is obviously another one on our radar. They just came out with their I guess the bull case for Matic was kind of twofold, right? Is a lot of people hate on them because they have a lot of these, we'll call them BD partnerships with some hot air, but not all of them are all hot air, right? And I think regardless of what percent is hot air versus material, I think it's important that there's a network business development team that is pushing forward real world use cases, right, for crypto, because it's just what the space needs to start doing, right? Is taking these real world applications and showing, Jamie Dimon and showing, regulators, the capabilities of these networks. So that was obviously one reason we were and still remain fundamentally bullish on Matic and the Polygon network, but also their the progress with their ZK EVM. I think zero knowledge. The whole market has kind of been waiting on zero knowledge rollups to kind of take shape, and it's possible that I think they came out with their testnet launch date, and it's likely that there's still some remaining momentum behind Matic and the whole ZK space.
Yeah, we've chatted with Brian Trunzo from Polygon a few different times. Obviously, you're right. Shout out to the BD efforts that they have in terms of Starbucks using Polygon. They obviously have had a lot of early wins with some other big tech names as well, including Reddit. Those catch people's attention. So if you're going to put Polygon up there,
I mean, Reddit's a miracle, right? I mean, you look at it's tough to generalize a social media platform, but Reddit users largely, the average Reddit user hated NFTs. I mean, if you looked at threads on subreddits on NFTs, there was a lot of vitriol towards them. But that's the amazing things a good BD team can do. You just kind of rebrand them to, I guess, what do they use? Digital collectibles. Mm-hmm. And it's off to the races. So I think that's what a lot of like BD teams are going to have to start doing, right? It's just, it's an NFT, but don't call it an NFT, call it a digital collectible. Right.
It's kind of, we found ourselves in very much the same position here as we were trying to sell, memberships to co-own coinage with us and help us build this show out. And yes, it is very tricky, particularly when you see maybe some shenanigans be pulled in NFT world. But you mentioned Polygon and, you mentioned scaling on Ethereum. And I think that is one of the questions I honestly struggle with too, because so you mentioned Polygon as a token to watch. But you also mentioned the idea of scaling on top of Ethereum, and certainly Polygon's not the only project trying to do so. In your slide deck, you also talk about Arbitrum and Optimism, and a lot of people are saying that the L2s of the world might be in this bull run the ones to watch. People who are trying to help Ethereum scale rather than the other L1s, other competing chains like Solana, like Avalanche that we saw in the last bull run. So, I mean, how do you kind of break out that thesis and kind of who might be right there this time around?
Yeah, so I think, when the merge happens, I don't think it's an accident that we started to see real movement in the L2 wars, right? That's when activity on Arbitrum and Optimism started to pick up. Because at that point, developers had the more confidence in Ethereum developers moving towards, Shanghai, then ultimately 4844, and actually scaling Ethereum network, modularly as was intended, as is mapped by the development community. And, it's pretty fascinating to see, I don't know if we can pull up slide 34, where we look at how mainnet transactions compare to, Arbitrum and Optimism transactions. But, we actually got to the point, I don't know if that's the exact date is December or January this year, where, Arbitrum and Optimism transactions as a percent of mainnet transactions was actually over 100%. And, the irony in all of this and why we think ultimately there will be a period during which it will be fundamentally beneficial to own layer 2 tokens is because when EIP 484 transpires and the costs of saving L2 transactions down to mainnet, when that cost goes down, fundamentally, obviously, there's going to be some new edge cases that emerge on L2, but a lot of activity is just going to migrate to L2. And so we could actually see a world in which there's this period that these layer 2 networks siphon some of the value capture from ETH. When this happens, we're still kind of wrapping our heads around it, but it's something that we're going to continue to keep an eye on, and something, frankly, we're excited about, right? Because ultimately, that's how the Ethereum network progresses, and how it gets to a point that we can actually start thinking about ossification, and it's also how companies are going to adopt these networks, right? If you're not minting a coinage grail, right, on mainnet, you're going to want to just use these layer 2s. So
yeah, no, it's true. I mean, and if you have more activity, obviously, if all those transaction fees start to add up, that's kind of what gave rise to Polygon and everything else. But I suppose as you have more layer 2 entrants, it starts to be, I guess, more mouths to feed, and a lot of people competing over that same opportunity. And so I guess we'll see who wins. And you're right, the value capture element is one that is interesting because it's great for transactions, but what does it do for the token unless you start to capture all of that demand on your L2? I think, just stepping back and thinking about where we're at as well when it comes to breaking this down. And again, I will give a shout out to all your guys' notes at Fundstrat because I think that they're really well done in terms of covering the important bits of how to pay attention to some of this stuff. And it's really easy to get lost in the sauce. But as I often get asked, and I'm sure you do too, there's a lot of people my age who are about 30, we'll call it that, and say, hey, what should I do with my money right now if I want to invest in crypto? Even my little brother asks me that all the time. And I do think it's interesting because as a normal advisor or someone who looks at this stuff, you can easily throw out, the old adage of 80-20 bond stocks if you want to think about stuff like that. But in crypto, it's pretty wild. And I don't know if there is, you've probably talked to a lot of people about kind of settled ideas on how to maybe start looking at this. But if you had 10 grand to throw into some of this stuff, what's the actual breakdown that you would kind of tell people this is what I would do? Is it mostly Bitcoin and Ethereum still, or as you look at these other things, I mean, how do you break out how people should balance some of this stuff?
Yeah, look, I mean, I think it's important to caveat that, not financial advice. We are an independent research shop, and you should, consult with an advisor who is your fiduciary before making those decisions. But I think first it's important to understand that it's tough to learn, invest, understand crypto, Bitcoin, ETH, you name it, without any skin in the game. Right. So whether price goes up, price goes down, it's always better to be in the arena than on the sidelines. And so I think that's the first step that anybody should take, invest in some Bitcoin, invest in some ETH. And that's what we're here for, is kind of to highlight some of the better risk reward opportunities in terms of timing. We like to provide research that allows for good risk management and timely deployments into some of these assets.
Yeah.
But I think it's also if you are an investor that wants to outperform Bitcoin, there are now these other assets out there where I think we differentiate some of our services from the bigger banks, some of the tokens farther out on the risk curve, not super small cap, but, like we talked about Polygon, we talked about Solana, we talked about, LSDs. These are some of the opportunities we've highlighted to clients, and, some of the opportunities I think are worthy of getting exposure to. And that's why we launched a core strategy, which is kind of this, it's our large cap strategy that we update and maintain over, and we'll update, at analyst discretion, but usually around certain catalysts or macro updates, et cetera. And what we do with the strategy is we designate an allocation to stablecoins, and we designate an allocation to Bitcoin and some other alts. And the goal is to outperform Bitcoin over an entire cycle. And, so, I mean, if you're interested in, if you're a retail investor interested in starting out and maybe outperforming the market, I think that's perhaps not the shill, but perhaps a good place to start.
Hey, listen, we welcome it when there's real value behind a shill. There's nothing wrong with that. So we will allow it, Sean.
No token, though, unfortunately.
Non-token. We will allow a non-token shill. But I do think, so we talk about the enthusiasm, and that's another big piece, because I hear your price calls, and I do think, the enthusiasm has been building. I think a lot of people are coming around to the idea of, okay, that was pretty wild what happened in 2022, but if the bottom's in, where do we go from here? And if you could concisely, I guess if you boil it down to people who are still on the camp of, no way, man, there ain't coming back from what the hell happened in 2022. And you would give them like one sentence to say, no, we are back, and this is why. What do you use as kind of that punch you in the face, crypto's back because of this kind of a line item to really deliver the point home?
Ooh, that's a tough one. I think, oh man, I don't know if I have a single sentence, but I mean, look at what happened last year. It was what got wrecked. It was the crypto capital market infrastructure and this whole concept of due diligence by proxy, right? Like there was a lot of unhealthy leverage supported by very little underlying economic activity production, exacerbated by one of the greatest frauds since Bernie Madoff, and throughout that, we saw those crypto capital markets get broken, but DeFi was clearly senior in that crypto credit stack. We saw that, I think, when it was Celsius that was trying to pay off some loans. The first thing they had to do was pay off their DeFi loans. We've already seen this rebirth in a focus on decentralization, transparency. We've seen a big push for proof of reserves and actually using these tools to make this market, more consumer friendly. And I think, there's just this, the thesis of censorship resistant money, composable and interoperable smart contracts, and digital ownership rights remain unchanged. And, I think is why, we feel very excited, more excited than the median person about this year, because there's going to be a refocus on those fundamental things that brought us to the space in the first place. And I guess from a high level, if you think about it, there's just less bad stuff for less useless stuff. It's kind of been wiped out for liquidity to go to, right? And so more liquidity. There's less bad stuff for liquidity to go to, and so we think that a lot of the assets that have more meat on their bones will benefit from that.
Let me ask you this too, then, because I feel like if there is a risk, and maybe I'll point out some of them or raise them for your price call for Bitcoin to hit 44,000. If there is a risk that you would say, all right, here's my out, what is the thing that could potentially block that from happening? Because we saw a lot of regulators up their game in terms of starting to clamp down on a lot of this stuff. We saw institutions maybe get a little shaky in 2022 in the wake of all that you just described. So, I mean, what is the overhang? What's the biggest risk to Bitcoin not hitting 44,000?
Yeah, I mean, I think it's important to understand. I guess first, it's not always going to be up and to the right for Bitcoin, right? So if our price target range is whatever 38 to 44, it's not like we're going straight there, right? But I think we've become incrementally more bullish on Bitcoin and crypto as a whole, because of the more conducive environments. Macro environment for assets that benefit from increased liquidity, right? We had the debt ceiling agreement, which kind of put a cap on issuing treasuries. And so we're seeing a lot of the capital from the TGA being forced into the private market. We've seen, incrementally more dovish behavior from the PBOC and the BOJ. And frankly, we've seen the Fed kind of admit that, inflation has been disinflationary. So I think the biggest risks are macro, right? And if we see, a near-term debt ceiling agreement, incremental hawkish behavior from, the Asian central banks, or if we see, the hawkish acceleration from the Fed substantially beyond what both Fed officials and the bond market are pricing in, then that is going to put the brakes. It's going to pour some water on our price target. But I guess just to round things out, you mentioned the regulatory aspect, and frankly, I not a big fan of Gary. Obviously, I don't think a lot of people are. But if we're just focused on the token prices and how regulation affects asset prices, I'm much less concerned, if we're just trying to outperform the market, much less concerned about regulating centralized providers, right? Obviously, it's going to push some funds and services offshore and perhaps make things more difficult for the average consumer, but it's not going to stop a lion's share of capital from participating in this market, right? And so I'm less concerned about that type of stuff affecting market prices, and I think that's why we saw the big bounce that we did last week is because it's not like they're trying to, if you rewind the clock back to, I think it was end of 2019, perhaps it was end of 2020 actually. I think there was a midnight proposal from the Treasury that proposed disallowing centralized exchanges, centralized hot wallets from sending crypto to non-KYC'd wallets. So essentially, you just wouldn't be able to be on exchange and send funds to your MetaMask, and that is something that would be concerning for me. But
well, I think the crypto space in general has gotten better at trying to fight back against regulation that doesn't make any sense at all, and I think they're kind of in a battle over that right now around staking. And you mentioned kind of your excitement around liquid staking options and the ability for people to maybe interact with staking beyond just staking as a service, which the SEC has significantly gone after with what they did with Kraken. So, I mean, how does that impact things as well? Because staking seems pretty important. For those who don't know, it's basically how you secure these proof-of-stake networks as you put your ETH up, in the case of Ethereum, and, help support the network. But they have issues with centralized lenders letting you do that in staking as a service. So how does that does it have any impact at all on your price call for ETH if it is potentially a bigger issue for regulators?
To get right to the point, it does not. I think this was another thing that was kind of, misinterpreted by the market. A lot of people were making a little too big of a deal. Obviously, we love Kraken, we love Jesse, we love that whole team. But the SEC frankly had a pretty good case against Kraken there. Obviously, first off, not all staking is equal. If you're not providing security to the network, it's not really staking. It's more like that's definitely more like a lending contract. Also need to consider who owned the assets. In that case, there was actually a transfer of assets to Kraken. It was custodial, right? Which kind of further supported the fact that there was a lending type relationship there, right? It was kind of like a debt investment contract.
Yeah.
And then you also have to consider, who's determining the rewards or the rate. And, from what I understand, it seems like Kraken, it wasn't as formulaic of a pass-through, right, from the Ethereum network to consumer. There was, whether it was around how it was marketed or the actual mechanics behind how that rate was paid out to people staking through their custodial service, it kind of did mirror an investment contract. And so I understand that, right? I get it. But but there's still plenty of options out there that are non-custodial. Coinbase has an offering that's non-custodial, and frankly, it only throws water on retail custodial staking. If you're an accredited investor, obviously it's our goal to be more inclusive and bring retail into the fold, but institutions are still allowed to stake through Kraken and other custodial services.
All right, so we'll just let that one sit there then, and not be too caught up on it this time around. But to wrap things up here, as we have been chatting for about an hour, I do think, some simpler points for people to walk away with, just boiling all of this down, because again, as I said, always love the research that you and the Fundstrat team puts together in crypto. And I want to highlight those main takeaways, which I believe would be, if I were to look at it, that you're a big fan on what Ethereum could do in 2023. You like where that's going. And maybe perhaps more so than what could potentially happen with Bitcoin in 2023. What would you say is the way to simplify that as maybe a main takeaway between those who battle all the time, Bitcoin or Ethereum?
Ooh, yeah, that's that's a pressing question. I think we'll see dominance remain strong through Shanghai, and I think as the market starts to digest Shanghai, we'll probably see some reversion there, right, and start to see some outperformance from ETH. In terms of absolute returns, that's tough to say, right? I think ETH started from a higher ground in this calendar year, but if prior cycles are any clue, ETH, which has performed as beta to Bitcoin, should likely outperform.
There you go. It's an ETH year, perhaps, if we do see Sean Farrell's premonitions come to light this year, which, by the way, I think in the past they have, so that's important to keep in mind. But yeah, if there's other one thing, I guess, that you have on your radar for things to watch, we like doing these with all the guests that come on to kind of wrap beyond just price, and this may be the boldest call that anyone has given since it's the first time we're talking price on Coinage. But beyond those bold price calls, Sean, is there anything else that you'd want to throw out on the record for being something to watch in 2023 that people should be paying more attention to, perhaps, in the crypto space than it's getting covered on mainstream media?
Ooh, Zach, putting me on the spot there. That is a phenomenal question. I think if I am looking at the market, the opportunity, and kind of like the prevailing narratives, I think a lot of people are a little too bearish and a little too, how do you say it, kind of jaded around real world assets, right? It's because they're not that sexy, right? They're just kind of, a lot of them are just like financial products on chain.
Mm-hmm.
But if you are concerned about servicing, block producers, right, and compensating them, I mean, that's what we're after, right? And so while those might not be the projects that provide tokens, real world assets, I think, are going to be a fundamentally constructive theme throughout this year. And if you don't think that is the case, I'd invite you to think about what stablecoins are, and stablecoins, which is, I'd say the irrefutably proven use case of, real world use case of blockchains to date. What are those? They're just real world assets, right? It's a boring dollar deposit that is, it's like a on-chain Eurodollar system, right?
Yeah.
And if you look at, the number one, fee burning smart contracts on ETH, depending on the date, Tether, USDC are both up there in the top 5 most days. So I think that's something that we're generally excited about. Probably not going to be a lot of token craziness around it, but will ultimately be constructive for the underlying networks.
Yeah, it has been interesting to watch, and obviously boring is probably the best case scenario for stablecoins. As we saw in 2022, sometimes that's not the case, and then it is not boring thereafter. As we highlighted.
And actually, Zach, it escaped me. I also want to highlight Ordinals.
Oh, you do want to talk Ordinals?
I do. I want to highlight Ordinals. It's fascinating. The Bitcoin community kind of backed into a solution to the widely touted, fee problem, right? We're seeing block space super congested for the first time since pre-SegWit. And, I think it's we've yet to really see it manifest from like a fee market perspective. Fees are starting to pick up. But that is something that could certainly alleviate miners heading into the next halving and kind of curious of this on-chain bear market that I think we highlighted earlier, and something that's I think I'm super fired up about.
I'm kind of surprised to hear that, honestly. As a guy who's so focused on, traditionally like real market use cases, you're excited by NFTs crossing over and being on Bitcoin.
Hey, look, I think people want to own NFTs, JPEGs, that is their own, prerogative. I think that is a real, quote unquote, real world use case. And looking at how, they're more like NFTs is probably a misnomer. They're called inscriptions. But if you look at inscriptions compared to, NFTs on ETH, in many ways, these NFTs are it's all of the data is actually on chain.
Yeah.
And, there's just this kind of like, cyberpunk ethos that's kind of reemerged within the Bitcoin community. That's been quite refreshing to watch, especially after what's transpired over the past, year or so.
Yeah, no, it's an interesting thing to end on there, and I think it's probably too early to see exactly how much is going to come from it, so I do want to have you back on once you have more data around what Ordinals are doing for Bitcoin, but I do think it is fascinating because you're right. It's brand new, has a lot of people talking, and it's a controversial. Maybe it shouldn't be, but it's weirdly controversial, or it was for a little bit.
Everything's controversial, man. It's the world we live in.
Welcome to crypto, baby. Sean Farrell, the head of digital asset strategy there at Fundstrat. I appreciate it, man. Thanks again for taking the time for a full hour here to talk with us. And thanks again for minting one of our NFTs as well to co-own coinage with me and everybody else who has them. Appreciate everybody else for listening as well to another Coinage Chat. These happen every Tuesday and Thursday at 11 a.m. on our Twitter account. Appreciate it, Sean. Thanks again, man.